I'm very pleased to welcome all of you. I'm the Director of Impact Investments for the John D. and Catherine T. MacArthur Foundation, headquartered here in Chicago. And it is a huge pleasure to co-host this event with our fantastic partners, the Kellogg School, of which I'm a proud alum. Where are our Kellogg students? Are you in the house? Are you here? Thank you for coming from Evanston. And also Chicago Booth Social Enterprise Initiative, which is another great program. And where are the Chicago Booth students that came and joined us? Oh, Hyde Park, very strong. And since I grew up in Hyde Park, you know, I feel a little torn here. So part of the reason we wanted to host this event is because Cathy Clark is one of the most important people out there writing, talking, and sharing ideas about impact investing anywhere in the country and around the world. And in fact, if there's a meeting on impact investing, Cathy will be there. It's fantastic. And it was just so fortunate because she's doing a project with us at the MacArthur Foundation. She's co-authored this book with Ben Thornley and Jed Emerson, who's another thought leader in this field. And we thought, as long as we were going to fly Cathy and Ben to Chicago in February, we might as well be nice and share them with everybody else in town. The other reason we wanted to do this is because I'm not sure that folks that live right here in Chicago who are interested in impact investing know all that much about what we've been doing at MacArthur. And it's actually been going on for 30 years. So how many of you in this room right now work for an organization that currently or has ever received an impact investment from the MacArthur Foundation? Can you stand up? Program-related investments. More than you knew. Thank you very much. And many of you have paid back those impact investments too. We thank you for that as well. And you've leveraged them and you've used them to create more affordable housing, to finance small businesses, entrepreneurs, child care centers, health clinics. There's a whole bunch of great stuff going on in Chicago all the time, and we're incredibly proud that we get to use our resources in this way. And in fact, right this minute, we have $50 million invested in impact investments working here to make Chicago a stronger, better, more vibrant community with more opportunity for more people. So with that, I want to just say a couple words about Cathy and turn it over to her. We were trying to figure out when we met. It's at this point a distant time. It's certainly before the word impact investing was used, because that's actually a pretty new term. Cathy was one of the first people I ever heard talk really seriously about the challenge of measuring social impact. Measurements and metrics are something we hear about all the time, but I think that was 15 maybe years ago that we were starting to have that conversation. Certainly when I started working in this intersection of finance and social good, there wasn't even the term social enterprise. So it is just an amazing thing to me to see this many people recognize that when someone like Cathy's coming to town, it's important to show up, snow or no snow. So Cathy leads an incredible center at Duke. She's got all kinds of students working with her. She was a member of the National Advisory Board on Impact Investing that issued a great report last year called Public-Private Capital for Public Good. I don't know if you can see her Twitter handle, but I've learned that Cathy HC is where you go on Twitter if you want to make friends and learn about all things impact investing. How she does all of this and writes books at the same time, I have no idea. She also has 2 kids. So with that, I'm just going to say that I'm very happy to not only have the job that I have, but to have a job that lets me get to work with people like Cathy.
Oh, you're so kind, Debra. Thank you. It's an honor to be here. It's great to see all the interest that there is in Chicago, 20 inches or not, in impact investing. The secret to writing a book while doing all the other things I do is to have co-authors. And I have wonderful co-authors, and they are quite regretful that they couldn't join me here today. So I wanted to, first and foremost, thank both Ben and Jed, because we really enjoy working together, and we have different perspectives. So later when we get into the Q&A, I'm going to try to channel what Jed would say or what Ben would say, so you get the full breadth of the reactions. What I'm going to do now is actually walk through a bit of a presentation that talks about the book that we just released in October called The Impact Investor, but more importantly, the research that that book was based on. Try to do it pretty simply so that you can get the contours of what we found. And then we're going to have a little bit of Q&A, first between Debra and me, and then with the whole room. And I really look forward to that because the field of impact investing is really at its infancy. And as Debra mentioned, the term itself is rather new. The practice of doing it is not new at all. But the attention that's been given by so many different sectors in society to thinking about how impact investing can be a tool for them is dramatically new, and it's a really exciting time. And so when Jed, Ben, and I started thinking about doing some research in this field about 3.5 years ago, the first question we asked, and it relates to what Debra was talking about, impact assessment, the first question we asked was, is it time to start telling the story of performance for impact investing funds, right? So everyone thinks about, I'm an entrepreneur and I want to get some money, but what, who are you getting it from and how are they doing? And what are the pressures for them? And so that's the research question that we actually started with. And we set out to look across the universe of different institutions, and there's clearly a very long history of people who have been doing microfinance around the world and people who have been doing community development. But what could we see across different sectors to kind of show the diversity of this field? So the first thing we did is we said, well, who has performed? And so to answer that question, we went out and we identified about 350 impact investing funds around the world. And we went to the people that invest in them, which tend to be LPs or limited partners, although there's different forms and different kinds of stakeholders. And we said, who's great? And then we defined that, not just who you think is cool, but because there's a lot of that, a lot of hype in the marketplace, but who has actually met or exceeded your expectations, both in financial return and in social impact. And that list got much smaller. About 30 funds were named consistently, or at least by one or two people. And then we went to those 30 funds and we started digging around and talking to them. And we said, well, there's some here that are kind of on the edge of being successful. They don't really have exits, so they haven't really paid the money back. There's some here that are really great, but they're all kind of doing the same thing. Let's just assemble a group that's diverse and interesting. So get the idea of statistically valid sample out of your heads. That's not what this was. What we said was, let's choose 12. Let's choose 12 funds around the world that are meeting or exceeding their investors' expectations, and let's look at them deeply. So we spent 3 years. We actually went under the hood of these funds. We signed non-disclosure agreements with them. We looked at their records, their agreements, their investments. We did 360-degree evaluations. We did interviews with all of their stakeholders, their investors, their entrepreneurs, their partners. And our question all the time was, what's your special sauce? What has led you to have this success? And then we look for patterns across the funds. So what I'm going to tell you about is a little bit about the 12 funds. I'm going to tell you a little bit about the patterns and then some implications of that. So the 12 funds themselves manage about $1.3 billion. So it's a very small percentage of even the impact investing marketplace right now, which the Global Impact Investing Network estimates to be about $44 billion. In terms of the kinds of impacts that they target, it's quite diverse. As you can see from here, we have across this portfolio of 12, many of them are working in business growth and job creation, health, microfinance, education, agriculture, and affordable housing. In terms of their financial performance, and this is something that I want you to really remember, it's really diverse. And what we found is, and we kind of divided the financial achievement of these funds into 3 categories, and I'll just read you the labels and then talk about them. So the first one is looking at emerging and developing market, equity, hybrid, and debt funds, and those returns range from 3 to 22%, so quite a big range. Developed market funds between 10 and 14%, and then a set of funds that we call social debt funds that were going between 0 and 3%. So here's the thing to remember about this. This was the funds that succeeded. This was the funds that actually met their target. So that range between 3 and 22% isn't that the 3% funds didn't do what they intended to do, that's what they set as their goal. So there's a huge variety of goals in this space, especially outside of the developed markets. We also talked to them a little bit about the kinds of impacts that they have, and this is just to give you a few aggregate figures. They had so many different impacts that one could not aggregate, but of the ones we could, 1.3 million jobs created or sustained, 17 million people provided with access to finance, 40% of the enterprises receiving finance were led by women, and 60% of the enterprises receiving finance were led by individuals from disadvantaged groups. So some impressive figures. The 12 funds themselves, you'll see, are also quite